return. It is better than any asset you can buy. However, as investors, we like to spend a lot of our time thinking about the assets, and we don't spend our time really thinking about the taxes. Or if we do spend our time thinking about the taxes, we come up into other things like Ali had mentioned earlier. Well, I don't know who to really talk to about who can actually move the dial with my taxes because I don't have access to the right CPA. I don't know what things can I really do, and how does that fit into a bigger picture of how my asset strategy is going to impact my wealth creation strategy or my asset acquisition strategy. But we know that taxes are a 30 to 40% return on investment for the money that you spend on saving money in taxes. And those dollars, they spend and invest the same. Whether you make $1 from a great asset buy or you save $1 on taxes, those dollars spend the same, right? It's just needing to learn another side of the equation. The wealthiest people I know, this is where they spend most of their time thinking about, is actually inside of the tax strategy, right? So let's take a page out of their book and say, hey, maybe we should really think deeply about that as well. But we're talking about series LLCs today, and this is where this next piece comes from, the 5 pillars of asset protection. And this is where we're protecting ourselves from lawsuits. It's the other way we could lose everything. So if you own assets inside of your personal name, your personal home, your bank accounts, your stock accounts, real estate investments, syndication investments, if you own those assets in your personal name, you are inviting an opportunity where something could happen in your life and it all could be taken from you. If you own assets in your personal name, you are inviting the opportunity that something can happen in your life and it could all be taken from you. Why? Because if everything is in your personal name, it's one big old pot of assets. And then it's a litigation attorney's, happiest scenario. Well, I know where all these assets are. I can find them on the public records and otherwise because they're all inside of their personal name. So it's really easy for me to find. And it's all in one pot. So all I need to do is sue them and I can get access to everything they own. The tricky part is there's no way to really help that besides using these types of asset protection vehicles because you always have liability. There's no way that you can operate in this world normally and not have liability, because if you're driving a car and a car accident that you could get into can exceed the limits of liability of your car insurance. If you're doing business, you're sending emails, making communications, all of those, somebody could say, oh, you lied to me. Even if you think you're being honest, remember, they'll lie about it because that's the nature of lawsuits. That's why people hate lawyers. And so you need these types of shields in place to make sure that you can't get taken from you. So when you're thinking about asset protection structures, what are you thinking about? These are the things that I've found through my experience are necessary to think about to protect yourself from lawsuits. You want anonymity. You want to protect liability, separation, isolation, insurance. You want to anonymize your ownership of the entities and the assets. You want to protect yourself from liability by using good contracts. You want to separate all of the operations of the business from the assets of the business. Remember, we're here building wealth together, right? We have a wealth building business. That's what you're building. You want to isolate every asset. So if there's a lawsuit against one asset, they can't go after the other assets. And you want good insurance in place, ideally with an umbrella insurance policy, because that gives you some leverage over the insurance companies. Then, after you're able to protect the money from the taxes, protect with the asset protection, you want it to run easily. So that's how you can get your time back. And then you want this to be able to pass to your family when you're done using these assets. That's your legacy planning. And if you do all of this together, that's where you get to the foundations of higher levels of personal fulfillment. Remember at the very beginning of today's session, right? Yes, we're all here because we know that we need to be able to secure the finances of our lives. And it's important to never lose sight that the purpose of securing the finances of our lives so that way we can actually go live better lives, bigger lives, explore life to the fullest that we can, knowing that we always have gas in the tank for the road trip. So we can go see more places, do more things, have more experiences. And that's what we're looking to do here, is how do we secure all of these foundations? The Series LLC is one of the best ways to do that. So when you look at the types of protection that are there, we talked about this operating company. This is the operations. They're using a traditional LLC for. Some people will call this a shell LLC. All that means is that it does everything. It doesn't own anything. You'll form this in the state where you currently do business. It's going to be your face to the world. It's going to sign contracts, hire contractors, and do all the other activities that could be sued. If you're making over $50,000 a year, you would want this, and it has active income coming through it. You're going to want this to be taxed as an S corporation. You can see in here, I'm layering in. See that the LLCs, that the corporate structuring doesn't just provide a protection. It also has some tax things that we're going to talk about more in depth later. But I want to highlight that for you now so you can start thinking about, oh, all of these things are all interrelated. It's all one holistic question that we're trying to solve. Now we have our soft assets. Soft assets are things like your stocks, your cash, your syndication investments, whatever those cases would be. A lot of times you'll always store those in your asset holding company. If your series LLC was the asset holding company, that is the right one for you, then that would be held in the name of what's the parent series. I'll show you guys what that is here in a second. But the parent series is kind of like the mothership. It's the entity that sits in the top, and all the children are the little underlings that sit underneath it. And each one of the underlings, each child series is where you would hold a hard asset or any asset that you want to compartmentalize for liability purposes. So a lot of people are wondering like, hey, well, what should I be using here? Like between, do I even need an LLC at all? Or do I just need a traditional LLC? Or should I be using like a series LLC? Do I need something that's as complicated or as robust as a series LLC? And you don't need any LLCs at all. If you have no assets, you have no business activities, you have poor credit, and you never are intending to improve your credit. Why? Because you ain't got jack and you're not trying to go nowhere. So why would you need any LLCs? You need the LLCs in there to either protect your assets, move the assets out of your name, it moves into an LLC name. The LLC is treated as a separate entity for liability purposes. So now all my assets are protected. Or you'd say, well, I want to keep people from being able to sue me. So I'm going to do all my business through this LLC, through an LLC. So that way what they can do is they can sue the business. They can't come after me personally because it was the business that sent the email, signed the contracts, or did whatever. And why don't you want people to be able to sue you personally? It's because even if you have no assets, and even if all of your assets the assets you do have are protected inside of an asset holding company, you're still doing business in ways that you want your credit score to be protected. You spend a lot of time and a lot of years protecting that credit score and building that credit score up. It'd be a shame to let all of that hard work go to waste because you get sued and you don't have an LLC in place to protect you personally. That's going to impact your ability to get financing and do the other things you want to do. Those are the only types of people that don't need anything, as if you fall into that bucket. If you have assets, you have business activities, and you're looking to protect your credit score, or build that credit score up and protect it like the asset that it really is, because your credit score is an asset, then you need at least one traditional LLC in place. The moment that you start having assets, that's when you start needing a series LLC. Because a series LLC is your asset holding company. It's your vault, right? It's the castle of protection of where everything is stored. And then your operating company, your traditional LLC, that's the place that's doing all the operations, protecting your credit and protecting you personally. So we're looking at the asset holding companies. There's actually a number of options. You've probably heard of some of these options from the research you've already done online. You can do like hub and spoke models, which are just a conglomeration of a ton of different LLCs together. A series LLC, which is the hub and spoke model, but with a lot less cost associated with it, a lot less maintenance. Or you might be in California and want to use a Delaware statutory trust, which works the exact same as both of these, but because it's a trust, you're able to avoid franchise taxes. And if you want to dive more into the Delaware statutory trust, I recommend jumping into the vault, bookmarking that page, and learn more about how the Delaware statutory trust works if you live in California. Because if you are a passive income investor, this is going to save you a ton of money on franchise taxes and give you all of the same tax benefits that you'd otherwise be getting. But your ultimate security is either going to be using your Series LLC, or if you're a California or Delaware statutory trust. Because what it's looking to do is provides the separation between you, your assets, and your business. Keeps all three things compartmentalized. So that way you can minimize the risk for storing your soft and hard assets in a way that if anything happens in your life, they can't get to the assets, right? They can't get to the money. And they can't get to you. So let's look at some of the basics of the entity structure here. So right now I have up here is the diagram, really basic diagram. This is the parent series LLC that you see here. And this parent series LLC at the very top of the diagram, that series LLC parent is what's filed with the state. And it has one EIN number, one bank account, one set of accounting books, one filing with the state, it's one entity to maintain. And you see all these individual children. Each child, for liability purposes, is treated like an individual LLC, but they're free to create and they don't cost anything to maintain. So what that allows us to do is to say, hey, well, we can just take each of our buckets of assets in our lives and let's break them up. So that way, if there's anything that goes wrong with one set of assets, it can't touch any of the other set of assets. Yeah. Now, when we're looking at the Series LLC basics, I want to really highlight this fifth check mark down here on the left-hand side. Do you guys see that? Where it says, form it in these states for charging order protection and use it in any state. This is extremely important. Charging order protection, an LLC without charging order protection is almost worthless. But I bet you haven't heard that before from your CPAs or your other people in your life. Might never talk to you about charging order protection, but it's the single most important thing when you're looking at what type of LLC do I need. And what charging order protection is allows you to be able to have that 360-degree bulletproof type of structure. So let's talk for a second about the LLCs. So when we look at the LLCs, we know that every LLC that's out there doing business, if somebody sues directly against the LLC for a contract that the LLC had signed, or if somebody sues against a piece of property that the LLC owns, and they sue the LLC, can they get to you? And the answer for every LLC on the planet is no, they can't get to you. That's the nature of a limited liability company. All of them. There's a separate question, though, that says, what happens if somebody sues you because you got into a car accident? Can they take your stock ownership of your own LLC? And if the LLC doesn't have charging order protection, the answer is yes. So states like California, for example, don't have charging order protection, meaning that in the state of California, if you own some stocks in that LLC or syndication investments or whatever the case may be, and that's all you had was just a California LLC holding those assets, if somebody sued you, they'd be able to take your stock ownership of your LLC, which means they actually get to take the underlying assets of the LLC with it. And you might say, holy smokes, how has nobody ever told me this before? So, well, this is where we get into the details, and the details matter. So if you currently use an LLC at all, I'd highly recommend that you make a note to follow up with after today's webinar and to research, do the LLCs that you have charging order protection? If not, it might be a good time to look into the information that we have in the vault or give one of my staff members a call. Talk to one of our paralegals, one of our attorneys, and see what can be changed, what things can be done to help shore up your ship. So with that Series LLC that we had here, this is just the basics of the Series LLC, but many people, what they want is to say, well, how can I create anonymity? How can I create the anonymity and the ownership of my assets and the ownership of my entities? And the way that you're able to do that without complicating your bookkeeping, without complicating your tax, without complicating your way to do business is the use of trust. Whether it's an anonymous trust that owns the parent entity or a land trust that owns title to the asset, whether it's a piece of real estate, syndication investment, or whatever the case may be. These trusts come into the structure to be a shield for the anonymity. So the asset protection structure protects you from liability if there's actually a lawsuit, but the trusts create the anonymity. The anonymity becomes important because if it doesn't look like you own anything, how many people are trying to sue you? You get into the car accident, right? And they'll say, well, how much does this person have? And it says, well, we actually can't find out any assets that they own. Well, how motivated are they to spend the $25,000 to $50,000 to go through a lawsuit if it doesn't look like you have anything that they can take? Well, the answer to that is low. That's how we're able to get most lawsuits dropped before they start. Is because of that. So as I said before, the series LLC is safe to use. There's no, if over the course of the last 20 years, if somebody could have had a court case that said, hey, the series LLCs, we're going to throw them out and they're not going to be able to provide protection, all of that would happen now. These series LLCs are in lawsuits all the time. Nobody is challenging the validity of them. The full faith and credit of the Constitution, which allows Delaware LLCs to be used in Delaware and used everywhere else, is the same reasons why you can form series LLCs in one state, use them everywhere throughout the country. If you use the trust structures, like we talked about earlier, that create the anonymity, you can also avoid all of the foreign entity registration issues and all the other complications that come hold with that. So I like using those trusts in conjunction with the series LLCs because it saves me money, makes things easier to run, avoids having to do other external filings. There's nothing new with the series LLC, really. It's just like we talked about earlier, how there was that hub and spoke entity that had just a bunch of LLCs. That's exactly what a series LLC is doing. So there's nothing new here for any courts or anybody to really consider. It's able to be operated with a single bank account, single set of accounting books, single EIN number. All you have to do with your accounting books is compartmentalize or categorize I can hear somebody speaking. Let me go ahead and mute who that is. Yeah. So the thanks to both of you here. I really appreciate it. Whoops. It looks like Sally's having trouble with keeping her mute on. So you can have everything inside of one set of accounting books as long as you categorize the income and expenses for each of the individual child series. And you can do that in QuickBooks. You can do that in a number of different ways. So there's no way that says, oh, your accounting needs to be done this particular way. It can be done whatever way you're able to typically do your accounting. So in that sense, it's relatively easy to use. So as I said before, you want to use that series LLC. You want to use an operating company in addition to it, a completely separate LLC that owns no assets, but does all of the operations. This is like that frontline defense because this is the entity that everybody's actually done any business with. It's where they sign the contract with this entity. They sign the lease agreement with this entity. This is the entity in which they were exchanging emails, whatever the case may be. So you want to have that operating company in place, apart and separate from your asset holding company or your series LLC. And this creates the separation that we're looking for. So we want to use anonymity trusts for anonymity purposes. We want a completely separate company as the shell LLC or the operating company versus what the asset holding company is doing. We want to add that anonymity in place. This is where we get, one trust or one child series per asset that we own. So that way it's fully compartmentalized. It's the smallest bucket of money in each bucket, right? Because each bucket could be sued. Additionally, with the trusts, what we're using with those are attorney-backed anonymity, which means we're using nominee trustees as attorneys to be able to screen the public records for anything that relates to a person or an address associated with any of these trusts, which means that there's the attorney-client privilege that attaches to everything that we put together. And in this way, if anybody comes asking anything about those trusts, they can't ask and we can't tell. Right. So it's the highest level of anonymity you're able to get inside of the US. It's how you are able to become invisible, right? If anybody ever comes looking to sue you, is that you're able to own your assets in this way. Now, there may come a time for financing purposes or sale of the asset that you say, hey, well, what do I do in that? Because if my name's not on these assets and these companies and it's all like an attorney in a law firm, how do I prove that I have the ownership of these things to be able to, for my tax purposes, as well as being able to sell things and manage things? And I don't really want anybody else to be able to control anything that I have either. So I don't worry. Absolutely. We've thought through those issues. And there's a reason that we use the nominee trust structures that we do are designed such that we screen everything on the public record, but immediately after the filing and creation of everything, i.e. everything becomes public, with that information, that you're, as the client, are automatically given full control of everything. We don't want any control. The more control we have, the more liability we run into as an attorney. So you're given back. We have never actually have control at all of any of the assets of the companies. And that if you need to prove that, because you say, hey, I want to sell this asset, or this company needs to do something, all you simply do is produce the paperwork privately to the bank or privately to the person who saw it. Because it's not part of the public record, it doesn't blow the anonymity that we're seeking to create for the protection purposes. So just know that with the anonymity there in place, you never are actually giving up any control of anything to anybody else, and that you're able to make private disclosures for financing purposes or sale of the asset or whatever the case may be, because none of those hit the public record. Because ultimately, this is what we're looking to do, is to create the anonymity inside of each spoke or each child series with the agent trust and the land trust to compartmentalize all of the assets, hold each asset anonymously, and then tie it into this overarching plan. So this is our master diagram. If you guys have become distracted while we've been talking, I recommend that you take a peek at what we're looking at here. This is a very high value diagram. This diagram actually shows you some of the basics to give you an idea of how things are laid out. So you have your asset holding company that's here on the right-hand side with your parent series LLC, with your child series and your land trust and your agent trust. This is compartmentalizing all of your assets and owning them all anonymously. That ties into your living trust as part of your estate plan that we're going to talk about here next. And then you can see over here on the left-hand side, this is your operating company. Again, also anonymously owned. And underneath that is where you may, if it works for your tax advantages, to be able to structure your private retirement accounts for this other income that's coming in. There's some creative ways to be able to structure that off, but that's some more of the advanced tax pieces that come through for us. As you can see here, everything goes through a living trust for estate planning purposes. And the reason for that is because with the living trust, you're able to avoid probate. You're able to control what happens to all these assets after you die. It keeps things anonymous at your death, and allows you to be able to manage and control and modify everything as much as you want to during your life, while giving you a single document to manage, right? To say, here's how everything is going to work. So that way you only have one document that you have to maintain every year. Otherwise, life just runs as normal with a standard operating procedure of, okay, great, I acquired a new asset. This is what I need to do for each new asset I acquire. And in the background, you have a support team to be able to help answer questions for you or to remind you of things that you would have forgotten in an ideal situation. Working with us, you would. I don't know necessarily how that works with other people that are out there. So inside of your series LLCs, what you can look at is your Wyoming entities are one option here. These are great. They're de facto anonymous entities. It's one of these things that you want to keep in mind, is that when you go into Wyoming, you're going to want to keep in mind about public information reports that have to get filed. You're going to want to think about also is like, what's the cost of creating individual child series? Sometimes those can be small costs that are there, as well as the cost to maintain those entities every year. What's the yearly fees associated with them? Our preferred state is Texas, because Texas has the charging order protection. It doesn't cost us anything to create child series. We don't have to register any of the child series that we create. There's no filing fees for them. The income Texas doesn't have any yearly fees associated with it. So that helps us save on some costs. And that Texas only runs into one issue, which is if you're making over $1 million annually, which in income from your investments. And the vast majority of people are making less than $1 million in passive income through their assets. And so this never becomes an issue. So it has all the protection and scalability, the simplified costs, and those things that we look for as the most optimized solution. But forming them either in your local state, if your local state has that, or in Wyoming is also possible as well, depending upon if you have a particular preference. So you can do this as a Wyoming formation here with a manager-managed Wyoming series LLC, and forming the individual child series land trust is appropriate. You can purchase assets outside of your series LLC just as you normally would. And then simply, a lot of times, sometimes people want to do that if it's real estate, for example, and they're looking to, get certain financing terms that they want to do it in their personal name, and they want to transfer that asset in after the fact. You're also able to set up a child series in a land trust and buy an asset directly into it. So our clients that are buying syndications or buying properties with cash, or setting up trust accounts or brokerage accounts or any of those things, they can just be set up in that way and just have the asset or the vehicle directly set up underneath the name of the child series or land trust, whatever the case may be. So this slide is really just to emphasize whatever assets that you're buying, there's a way to be able to use it in the structure where there's not any drawbacks. There's just a process that we want to step through to make sure that the other financing or other issues are there. So the same thing with buying property, selling property, or selling an asset. You're able to simply just do that out of the name of the land trust. You remember you will be the trustee of the trust. So you're the person that controls the asset the whole time. So you produce the document to the title company or to whomever you're selling the asset to that says, hey, listen, I control this trust. The trust is listed on title to this asset. Therefore, I can sell this asset to you. There's no 1031 exchange issues or any other tax disadvantages, bookkeeping disadvantages, tax reporting to your personal income or to your business income disadvantages with using this type of structure. Any refinancing, if you were using this with your primary residence or other types of rental properties you would have, any refinancing is also possible. You just simply do the financing outside of the structure and then move the asset back in after the fact. And all of your taxes, if you're inside of the rental income space, the taxes can flow through personal income or active income by using a property management type of structure, or they can be used to do it as purely passive income, right? So whether you want this income to be active income or you want it to be passive income, there's ways in which to use these company structures to flow the income correctly, have the appropriate agreements in place, so that way you can get the income classified in the appropriate way to be able to take the appropriate tax advantages. So what those advantages are can depend upon your state, whether you're in a separate property state or a marital property state, what your passive income looks like, what your W-2 or 1099 income looks like, et cetera. And whatever way you have to be structured, such that if you're have unmarried partners, and this is something you're looking for with your unmarried partnership, okay, can we use this type of structure? How can that work? Whether it's a DST or series LLC, all of those pieces are able to be put in place in a way that will flow easily, just as easy as anything that you have set up right now. My belief is that every investor should have a series LLC if you're owning assets that have individual liability associated with them in any way, shape, or form, right? So you have a primary residence and you may have some rental property, you may have some limited partnership investments, just to think through that as hey, do these assets have any individual liability? If they do, then I should separate them. And if I should separate them, then the cheapest, most effective way to get them separated is to use a series LLC. Your CPA, if you're going to work with us, of course, our CPA is going to know how to do this all appropriately. But if you have your own CPA, that's not a problem. Your CPA will understand what to do here after we have an opportunity to talk with them and explain to them, here's how the structure works. Since it works as a disregarded entity, it's usually a 5-minute phone call for them to understand, great, I get it. And this is how I need to file those returns. You don't need any type of special CPA or special accounting software to do any of the things that we've talked about here today. It's all very able to be done in a very basic way that you are able to self-manage. Of course, if you want to hire a team that manages it for you and trains you how to do that, of course, that's what companies are here for. But we have all types of training inside of the vault and things we're going to talk about here today about how do you do that if that is something that you want to do. And a lot of people ask, like, well, if the Series LLC is so great, why isn't everyone using it? And the reality is I think there's two things in place of why everyone isn't using the Series LLC. First is because the Series LLC only really helps people that have assets that have individual liability, right? So when you're thinking about people that are actually at that place of saying, well, my alternative would be to create a bunch of LLCs, right? And I have assets that have individual liability. Well, that's not the mass market, right? The mass market of people out there just don't need things that are very sophisticated. They're not building an investment company like you're building. Then the other reason too, and I think that may be going on, is that these entities, there's not nearly as much to do, right? There's not nearly as many entities to maintain. There's not nearly as many sets of meetings. There's not nearly as many registered agent fees that are associated with it. So it actually is the case that with these entities that the law firms that set them up actually make less money, right? And not to be cynical, right? But when you find people about like where are people going to be making money, then a lot of times you can find that the recommendations tend to follow sometimes what things are going to be able to make them the most money. It's just the nature of where things are at, right? So it's not neither good nor bad, and I'm not accusing anybody of anything, but it is something to consider with that. So because the series LLCs are so much more efficient. Great. So I'm going to go ahead and take a moment here to stop presenting on the series LLC. What I'd like to do is to have us take a quick break and break us into breakout rooms for people to be able to discuss about their asset holding, about the series LLC here, some of the things I've been learning in there, raise some of the questions that have come up for us during this talk that I've had here. I would have an opportunity to discuss with each other. Then when we come back, I'll be happy to take questions about to go over pieces that anything that anybody had missed, right? Or that wants me to talk about a little bit more as it comes into the importance of these asset holding companies and how that works. Great. So I'm going to go ahead and split us into breakout rooms. We'll be back in about 10 minutes, everyone. So please go ahead and join your breakout rooms. Feel free to take care of any bodily or bio needs that you have at that time. Discuss with each other about asset holding companies and series LLCs. We'll come back with questions like what came up for us that we need more information, more clarity, more guidance on as it comes to asset holding companies or series LLCs in particular. Please go ahead and jump into your breakout rooms. We'll be back. Give you guys about 9 minutes and I'll pull you back in.
Did you see what?
Welcome back, everyone. It's great to see that we have even the young ones in here learning about wealth building. They're getting the leg up, wanting to join in with good questions. The children aren't afraid to share. They're not afraid to share. Why is everybody else afraid to share? Coming back into it. Yeah? What's up, baby? How you doing? Good to see you. Awesome, everyone. So I hope you guys had a good time connecting there inside of your groups. What I'd like to do is offer it up. I need a brave soul to kick us off to say what about some of the feedback that we have here about what is asset protection. Some of these asset protection
Okay,
or series
Scott, I can do that for you.
All right, William, kick us off here, brother.
Well,
yeah, thanks, brother.
The bottom line to everything is that it's the real questions and what you really need to know amount to very specific information for your particular situation. And everybody's got a little wrinkle or a thing they're interested in. And so it's hard to do a general trend, but it's very easy to communicate with the people individually and look at their situations and see what elements you can find. And that's what we had. It was good in the group to just be able to connect with people and see what they're doing or what they're thinking about doing, rather than have to go to a course and absorb all the information that you don't need in order to find the one nugget you do